Hello guys and welcome back to the channel. So in today's video, it's really time to start panicking. Tesla has been cutting prices overall in the US, in the EU by mind-boggling percentages. So who is the one that should be panicking? Is it Tesla investors or all the other car companies that are out there? I'm here to beg to differ, and I think it's all the other car companies out there. Let me show you what I mean. So I'm having a new setup, and last time I did a video very late, and my video was frozen completely, and I was very pissed, but I still released the video, and nobody complained about it. So could you please let me know in the comments if you can see me, hear me, if the whole setup is fine? Thank you so much. So Tesla majorly cuts prices in the US and in the EU. This is a picture that I got from Twitter that shows the old prices and what the new prices are. We're going to come back to this because it's going to be very interesting. So the question is this a 4D chess move? By the way, if you like this content, please make sure you subscribe to the channel. And if you want to get exclusive content and support the channel, check out the Patreon, which is the first link in the description box below. And I released an exclusive video there, and I'm going to release a new exclusive video there. The first exclusive video is about my stock market strategy, and it will give you very interesting new viewpoints that I don't believe gets talked about enough on YouTube Finance. So back to the video. So investors are panicking because it looks like Tesla is losing demand, and they become desperate at cutting prices, to spur demand. But is this actually a 4D chess move? Tesla tried similar price cuts in China a few weeks ago, and the result was an immediate increase in wait time. So by this, we know that this is this is economics 101, but we also know that this is a very valid way of spurring demand, lowering the prices, and we saw this work really well in China. But wait, there is more. Tesla was basically screwed by the US government, and very little of their units got the actual 7,500 tax credits. But with this price decrease, it's big enough so that I know it says the increase, but the decrease is big enough for the Model Y long range, even for that one, to qualify for the 7,500 tax credit. So let's look at the prices again. So this means that after the tax credit, the performance Model 3 gets a 16,500 decrease, and the Model Y long range gets a 20,000 or a 31% decrease in prices. So if you're a Tesla competitor, it's time to panic. Have you thought about it? Why can't Ford or GM or Rivian do the same? It's because they are already selling EVs at a loss. Might I remind you that Tesla is going to still be profitable after these decreases, and more on this later in the video. It's going to be very interesting. So again, the government tried to screw Tesla, and this is a genius move because they are coming through the back door and they're still making themselves eligible for the 7,500 tax credit. And with these prices, if you honestly look at them, Tesla compares super favorable not just to EVs, but even to ICE vehicles. So now let's look at the business aspect of this one. So investors are convinced that margins are going to disappear, but I wouldn't jump to conclusions so fast. Remember that Tesla recently raised its prices because of inflation, and we all saw that all the raw material prices were increasing crazily. And Tesla raised the prices very high in anticipation of the raw material prices continuing to raise and inflation continuing to get worse. However, we all know that the raw materials are on the way down. So that means that Tesla, if they cap the old prices, they would have significant margin increases. And look at this tweet that I got on Twitter from Gali, who is a very early Tesla investor. He says, my August 2020 Model Y was 50K, excluding FSD, rims, and fancy paint. Still cheaper than it is today. So that's very interesting that the prices increased, and now that all the news cycle is about how much the prices have decreased. But if you look at it objectively from the outside, the prices are still higher than they were in 2020. Now, will the margins get destroyed? It's very an interesting topic. look at this. In the EU, Tesla has to pay a 10% duty for every car they sell. And they never had a European factory, right? So what they have been doing is making the cars in Fremont and then slapping on the 10% and then selling the cars in the EU. But now they have a European factory, but they never lowered the prices. So that was actually a quite significant margin increase for Tesla. And now they have dropped their prices 13-14%, but that's only a few percent real hit to Tesla's margins. Then in 2022, their margin in Q3 was circa 20%, but it was with two factories ramping production. And according to Elon Musk, these factories were gigantic money furnaces. So as demand ramps up and the factory fixed costs get split on more and more cars, this means that the efficiency and the margin will keep going up. So I'm not sure that the margins are going to get as much of a hit as investors think. But what is going to get hit? Tesla's competition, whether it's an EV or an ICE competition, they're going to be hit very, very hard because as we saw, these prices, Tesla is not just competing with EVs, they are competing with the whole auto industry, and their prices are very, very, very sexy. So it's kind of funny that they did this move. They lowered the prices in China when the China factory has been expanded. And then they did the same when the EU factory is ready to fully ramp. It feels like this might have been a 4D chess move. So anyways, let me know, guys, what you think. Let me know if you're panicking as a Tesla investors or like me, or you are foaming at the mouth and ready to buy more. In any case, please make sure that you're subscribed and check out even the Patreon link in the description box below if you want to, and I'll see you in the next video. Ciao, ciao.